former CEO of Google is the lead investor. Bank of America is one of the early adopters. This could be integrated into Visa. I just can't believe this is only at a 300 mil market cap. I've been in this space long enough to know when something's massively undervalued. I recently called Abster at a 500k market cap and it did a 40x. But this isn't just a low cap moonshot. This is the first project I've seen that could realistically go from the underground to institutional adoption and rival XRP in the long term. It's called Keeta. I bought a ton of it, and in this video I'm going to show you why it might be the most undervalued layer 1 in the market right now. PS, this video is not financial advice. Crypto is risky. Firstly, shout out to xescu on X for putting a lot of the Keeta thesis into this singular PDF that I'll be taking a lot of information from in this video. I'll leave a link to this down below if you want to check it out for yourself. So what is Keeta? Well, Keeta is a layer 1 smart contract platform that is boasting 10 million transactions per second with sub-second finality. It has native KYC/AML support built into the chain, and it's here to kill Swift, which is the messaging layer for banks, and that currently processes about $7 trillion daily. And it's not just all talk. The private version of Keeta has already been in use at major financial institutions all around the world. And the former CEO of Google, Eric Schmidt, is the lead investor in this. He is the guy that grew Google from a company that basically no one knew about to the giant it is today, and he has only ever worked with one other crypto project, which was Chainlink, one of the biggest projects in crypto at the moment. So it's just super rare to have him actually like a crypto project. Now, I'll get into the team and the insane backing and partnerships this project has in just a minute, but first, it's important you understand the tech behind Keeta, as according to the ex-Google CEO, Keeta is orders of magnitude more scalable and efficient than existing cryptocurrencies, and that is one of the main reasons he invested into this. So Keeta isn't your typical blockchain. It runs on a lightweight pseudo-DAG structure. In traditional blockchains like Bitcoin and Ethereum, transactions get put into blocks and are processed one by one. That means everyone's transactions are competing for space, and even simple actions like sending tokens can get delayed if the network's busy. And on top of that, you have to wait for blocks to process, which can slow things down. Some newer chains use something called a DAG instead of a blockchain, and this helps a bit as this allows them to process transactions in parallel, and this doesn't use blocks. But because it's still one big shared system that everyone uses, it can still get congested when too many users are active. Now, Keeta went a step further. So instead of one big DAG for everyone, Keeta gives each user their own DAG. So you can now have millions of DAGs running in parallel, each processing transactions individually. But this next innovation is what truly takes Keeta to the next level. All blockchains and just layer 1s rely on validators to secure the network. And for high-speed chains like Solana, Sui, etc., these validators are usually just one super powerful, super expensive computer, which becomes a bottleneck. Now, Keeta flips that model. It allows for truly horizontal scaling, meaning a validator doesn't have to be one massive machine. It can be built from multiple computers working together. And the more machines you add, the more scalable Keeta becomes. It's way easier and cheaper to stack loads of computers than it is to try and build one giant supercomputer. And this design is what allows Keeta to take full advantage of cloud platforms like Google Cloud and AWS, which themselves are also just massive collections of computers. And this right here is what enables Keeta to scale to millions of transactions per second. But just to be clear, even though it runs great on the cloud, Keeta isn't cloud exclusive. Anyone with the right setup can become a validator, no AWS required. Now, that was a very simplified explanation as to how the Keeta team built the most scalable crypto project in history. But scalability alone isn't enough for real-world adoption, especially when it comes to major institutions. The Keeta team knew this, so they also built features into Keeta designed specifically for giant institutions and traditional finance to use it. And in my opinion, it's these features that will truly set Keeta apart from every other crypto project. So let's get into them. Have you ever wondered why chains like Ripple and Solana that are way faster than traditional systems like Swift show basically no signs of institutional acceptance, and why institutions prefer making their own private chains like JP Morgan's Connexus? Well, the biggest reason for that is the lack of know your customer compliance on these chains. Normal chains have anonymous wallets, which means you don't really know who owns the wallets on them, which means that institutions may get sent money from criminals, or they may accidentally receive or send money to people from jurisdictions that they're not supposed to support. And they basically just can't risk that, which is why they're all on their private banking chains. But Keeta completely changes the game. They've built KYC and AML compliance directly into the chain itself. That means businesses and institutions can now choose to only interact with wallets that have been fully verified by trusted third-party KYC providers. Now, don't worry, Keeta still works like a normal blockchain too. You can create an anonymous wallet, but for the first time, there's an option to attach a real-world identity to a wallet and that is exactly what institutions have been waiting for. But they didn't just stop there. Keeta introduced something called anchors, which are built-in bridges that connect assets from other blockchains and TradFi systems to Keeta's ledger. Anchors essentially make it easy to tokenize off-chain assets such as commodities or other real-world assets directly onto Keeta. And on top of that, you can use anchors to tokenize all other cryptocurrencies and put them on Keeta as well. But perhaps the most impressive part of Keeta's chain is what you can do with the tokens on top of it. And this is where things get serious for institutional adoption. On Keeta, asset issuers can define precise rules for how their tokens behave. For example, imagine a Swiss bank tokenizing gold on Keeta. They could set it so those tokens could only be transferred between wallets verified by Swiss financial regulators. Another killer feature they have is custom privacy controls. Unlike most chains where every transaction is publicly visible, which makes them impossible to use for a lot of financial transactions, Keeta gives issuers the option to restrict visibility so only approved voting nodes can see sensitive transfers. So we've got all these features for institutional adoption and tokenization, and this last feature may be the biggest of them all and basically wraps everything up. So Keeta will have a built-in on-chain order book, which means it will have a built-in decentralized exchange, allowing you to trade basically every single type of asset. So this will be very similar to another project called Hyperliquid, which is the biggest decentralized exchange, worth currently $10 billion in market cap. However, unlike Hyperliquid, which only allows you to trade crypto assets, once again, Keeta will allow you to trade everything on its DEX, like real-world assets, etc., thanks to the features we just went over. So tech-wise, right now, this is the best layer 1 for trillion-dollar use cases, such as cross-border payments, which XRP has been trying to do with little success. You know, you can easily put fiat currencies on top of Keeta using anchors, and it's super scalable. Interbank settlement, so many banks want privacy for large transactions, and Keeta is one of the few chains that has privacy features. Real-world assets, Keeta has inbuilt KYC on the chain and precise token controls, allowing people to actually put the trillions upon trillions of dollars of real-world assets on Keeta. Trading, so we just went over this, you know, Keeta will have an inbuilt order book just like Hyperliquid. However, the main difference here is that Keeta is genuinely scalable enough to handle global trade. Hyperliquid isn't. It can only do, I believe, around 100,000 transactions per second. And once again, you can also trade every type of asset on top of Keeta. And lastly, we have general crypto use cases. So Keeta's chain supports smart contracts. So just like how people can build anything they want on Solana or Ethereum, you know, like meme coins, pump.fun, DeFi, etc., you can also do those things on top of Keeta. But once again, it's faster than those chains, and it also has those extra features like privacy. So that's Keeta and all its features, and you should be able to see how this chain is built for mass adoption in a way that no other chain is. But how much real-world adoption has Keeta actually got? Well, more than you'd expect. The project has already been running pilot programs with multiple financial institutions, and according to the Keeta team, they've served as an authoritative ledger, not just for settlement, but as the core record-keeping system at partner banks in over 50 regions. In other words, Keeta didn't just replace the messaging layer in banks, it replaced the bank's internal ledgers, and that right there is massive. One pilot even involved the Bank of America, and they basically built a service called BOTS, short for Banking Over Token Settlement or Money Transfer Service. The details of this are still under wraps, but this points to Bank of America potentially being an early adopter of Keeta's technology, which is something you don't really hear every day in crypto. Now, just to clarify, this wasn't for the Keeta layer 1, this was for the Keeta private chains. They were doing a bunch of private chains for banks as well, but you know, nevertheless, it is still good to see the Keeta team working closely with banks. Now, this second pilot is even bigger. So they actually had debit cards in partnership with Visa using Keeta's technology, allowing users to spend straight from a Keeta wallet at any merchant that accepts Visa. And this isn't just talk, there's an actual video demo showing a live Visa debit card powered by Keeta. And there's an even crazier part. The team has hinted that Keeta's tech could potentially be used as the ledger for Visa itself, which will allow them to do instant cross-border payments. If that happens, it's game over, and this is the new XRP. But it doesn't just stop there. The Keeta team is also working on a network-wide stablecoin initiative, with potentially big partners being announced in the coming months, with some speculation out there being that this may be a partnership with Stripe. Along with that, they have something called Keeta Pay, which is an app similar to Venmo for cross-border crypto payments. So by now, you're probably seeing the vision. Keeta is like a fusion between XRP's institutional focus and Sui's technical speed, but with even better tech, real adoption potential, and it's still trading at a fraction of their market caps. Now, I only briefly went over this at the start, start. However, we need to go even deeper into one of the most important parts of this entire project, which is the team behind Keeta. Keeta's founder and CEO, who is called Tai Schenk, originally worked on a project built on Nano, which was one of the most impressive DAG-based chains from 2017. This actually peaked at around $4 billion in market cap, which is pretty big for a project back in 2017. I also actually invested into Nano, so I remember just how impressive that project was for the time. Now, Nano didn't end up panning out, largely because the Nano community chose to go in a different direction that just didn't allow for institutional adoption. But Tai didn't drop his app idea. Instead, he evolved it and reimagined Nano's DAG chain model to solve one of crypto's biggest issues, which is institutional adoption. And obviously, that's what we have with Keeta, you know, a chain built using DAG technology that can scale a lot, that is also friendly to institutions. Now, he eventually pitched this idea to Eric Schmidt, the former CEO of Google, and it hit hard. So hard, in fact, that Eric Schmidt personally led Keeta's initial $2 million seed round and then followed up with leading another $15 million round once Tai proved to him that Keeta's technology worked. And this isn't just a passive investment. Eric Schmidt is very selective, and he has only ever involved himself in one other crypto project, that once again being Chainlink. So I mean, that should tell you how rare and serious this is. And on top of that, he also reportedly claimed that this could be the largest project he has ever been involved with. Now, just to show you how deep the connection is between Eric Schmidt and the Keeta team actually asked him to follow their account on X to prove to the community that their partnership was legit, which you can confirm right here. And yeah, they can literally just message Eric Schmidt anytime like you can a friend, and he genuinely replies. Like, I feel like I'm underplaying this. Like, this might be the closest thing we have to a Google blockchain. It's literally backed by the guy who ran Google from 2001 to 2011 and scaled it from a niche search engine into one of the most powerful companies on earth. I mean, if you think about it, this project basically has backing from Google, as Eric Schmidt is basically Google. Now, going back to the story of how this project was created, after Eric Schmidt was onboarded, Roy Keane, who was the lead developer of Nano, joined the team as well, along with a hand-picked group of engineers who have been building Keeta for the past 4 years. Now, the reason I'm making this video is simple. We are still ridiculously early on Keeta. If you've been following me on X, you would already know I first tweeted about buying Keeta when it was sitting at around 30 to 40 cents, and since then it has already 2x'd. And many of you are probably thinking you're too late, but even after this move, this thing is still massively undervalued compared to its competitors. Right now, Keeta isn't even at a $1 billion fully diluted valuation, and its market cap is only around $300 million. For the most scalable layer 1 in history with institutional traction, huge backers, that's basically unheard of. So let's see how high Keeta could get. So Say, which I'll be honest, I don't know anyone that uses this chain, is sitting at $1.2 billion in market cap and $2.4 billion in fully diluted valuation. Algorand, which is basically a ghost chain, is sitting at a $2 billion market cap and fully diluted valuation. Casper is at $3 billion for both. Aptos, which literally had its CEO walk away, is still valued at $3.4 billion in market cap with a $6 billion fully diluted valuation. Polkadot, which literally no one uses and is only worth anything because one of the Ethereum founders is behind it, is worth $7 billion. Hedera, which is targeting institutional adoption like Keeta, is at $8.6 billion in market cap, and that alone is like 30x more than Keeta, and it has a $10 billion fully diluted valuation. Sui, which in my opinion is Keeta's closest comparison tech-wise, is at a $14 billion market cap and a $40 billion fully diluted valuation, and XRP, of course, is in a league of its own, sitting north of $100 billion. Now, to be clear, I'm not saying Keeta will flip XRP this bull run. XRP is a long-established player with massive historical momentum, but if Keeta continues on this path with its tech, with its partners, its use cases, I genuinely believe it could at least surpass Aptos, and if all goes right, maybe even close the gap on Sui, Hedera, and Polkadot this bull run. But in the very, very long term, if this does achieve its goal at killing Swift, if it does get adopted by Visa, etc., then yeah, obviously it is game over for XRP. Now, before we wrap up this video, let's quickly talk about why Keeta is still sitting at such a low market cap, as it's kind of hard to believe, right? And more importantly, its roadmap and the major catalysts coming up that could boost its price. So first, why the low valuation? Well, it's actually by design. Keeta launched in stealth mode, no flashy marketing campaigns, no massive VC rounds like we saw with Sui or Aptos. The team took a different route. They wanted to build a community-first project, not one packed with early investors looking to dump on retail the moment it hits exchanges. And on top of that, if you think think about it, with the former CEO of Google backing you, that's worth more than basically all the VCs in crypto backing your project. So you don't really need more than that. What's more important is building a strong community, and that right there is what a lot of VC chains don't have. And how you build a strong community is by allowing that community to buy and hold from very, very low prices, as obviously they get attached to the project over time. So that's the big reason why Keeta is still flying under the radar. But if you look at the price action lately, it's clear that smart money is starting to wake up. People are realizing that this is a potential tier 1 chain with real fundamentals and are starting to pile in. In my opinion, if Keeta was backed by the same VCs as, Sui or Aptos, and it definitely could have gotten those VCs to invest into it, it would already be sitting at a multi-billion-dollar valuation up there with them. Now, let's get into the roadmap, and more specifically, the big upcoming events that could drive serious momentum for Keeta. First up is a huge stress test for the Keeta network. By the time you see this video, it might already be live, but basically they're working with the goal of publicly proving that Keeta can handle 10 million transactions per second. And obviously, once they do this, this will be great for marketing the chain. Next, and this one is absolutely massive, the mainnet launch is coming at the end of June. Right now, Keeta only exists as a token on the base chain, so if you want to buy this, you need to buy it on base. But as we approach the mainnet launch, I expect major hype, and as long as there isn't a major downturn in the market, this could be a very, very strong positive price catalyst. Plus, the team have said they'll be announcing 6 to 7 partnerships on the mainnet launch as well. After that, in the months following the mainnet, Keeta is set to reveal its stablecoin partner. From what I've heard, this could be one of the biggest announcements to date. And finally, in Q4 of 2025 is when the debit card rollout happens, I believe with Visa, and also the app Keeta Pay comes out. And further into the future, obviously, if the chain is a success, they'll keep having even more partners and, more apps building on their chain, etc. Now, the next section of this video is the most important part of this video. So let's talk about the risks. The biggest one right now is the price. So Keeta has already seen a big run up, and anytime something moves that fast and that high, there's always a risk of a sharp pullback. I personally bought in at around 40 cents, and I'll admit I FOMO'd in. If you were following me on X, you would have seen that happen in real time. So if you're not following me on X, definitely do it. I'll leave a link to it down below. But I do know some of you watching are probably discovering Keeta right now. So if I was in your shoes, I would personally just ignore the chart and ignore the pump and simply look at the market cap now and where this could realistically get to in 6 to 12 months in your opinion. Obviously not financial advice, but that is how I personally view these things, and that is why I just FOMO'd in at 40 cents. It might be worth not to go all in at these levels and keep a decent chunk on the side in case we do get that big dip so you can buy in cheaper. But for me personally, it is just so undervalued here that I'd still be comfortable buying at these levels. And if we do get a dip, just holding through that dip. But keep in mind, my strategy only works if you have a long-term conviction in this project. If you don't believe in this project like I do, then you will just panic sell when it dips. Now, there are other risks as well, like with any project, maybe the partners back out, maybe there are delays, maybe the tech just doesn't work as well as we thought it did. The usual stuff. Nothing is guaranteed in crypto, especially with new small coins like this. But if I'm even half right about this, then the fact that it's sitting at a $300 million market cap, while mid-tier ghost chains like Aptos, like Polkadot are sitting at multi-billion-dollar valuations, means the upside for this could still be huge. I genuinely believe this could be one of the most mispriced projects on the market at the moment. Let me know if you agree. I'll see you soon.